3. You will not need to watch ICT. You will not need to know what I think or my opinion. But narrative is understanding how they're going to deliver it. Who? The market maker. The algorithm. If they're going to be a manual intervention, which I believe non-farm payroll yesterday was. That was an absolute shit show. Like that was a beautiful run lower, but that's what you are trying to avoid. You don't want to be in that if you're trying to go long and you get caught in that on the wrong side. You try to do the bracket the market. Here's a buy stop, here's a sell stop, and then there it is. Sometimes you can get whipsawed and it'll tag you both directions. And that's the part about non-farm payroll that prevents me from wanting to trade it, because I don't have anything in my repertoire to know when they will do that one-sidedness, like almost like a CPI. Like you watch me get wrecked with my opinion on CPI when I publicly thought this is what I would like to see happen, but I can't push a button, but this is what I'm subscribing to. And then just right on up, it just shot straight up. Well, yesterday, I told you where I felt the market was going to go to. It was going to draw down first. It's going to reach towards what direction? The sell side. Okay, so that's your bias. The bias is it's going to go down, but you can't take any entry yet because non-farm payroll is highly volatile. So you got to let that market hit, run, and then see what's left in its wake. Where did it leave opportunities to come back and either run for stops or go back and reprice to where there's an inefficiency? And I showed you that in the review yesterday. Okay, I sent a tweet out and said, what do you see on the hourly chart? Okay, I wanted you to take a look at your hourly chart and see what you saw. And obviously you can see the weekly opening, that gap, and also there was a volume imbalance from the daily chart. Extend that through and it went down to the buy side imbalance, sell side efficiency discount low. So all of that was mentioned in the little review that I did on Twitter. So go back and watch that. It's a real short little 2-minute video. But I mentioned that in a second tweet. I said, here's the buy side, here's the sell side. Both are likely to be swept. Now, if I co-signed first that sell side's my interest, that's my bias. I'm looking for a move to go lower. And it's going to go, in my mind, the largest move is going to be where? Down. It's going to seek the sell side. Why? Look what it's done all week. It just kept pressing higher, up into an imbalance on the daily chart. Once it's done that, then there was a shift in market structure. You saw me sell short in the middle of the week and get the biggest portion of the move there with the $40,000 example from beginning to end. I didn't have some off-screen shit, okay, over leveraging without a stop loss. As my example, I walked the whole fucking thing with no partial. So you saw the big move of the week. You saw me point where I thought that the non-farm payroll would aim for, but I also mentioned that both of those liquidity pools would be swept. So it created that sell-side imbalance, sell-side imbalance, buy-side inefficiency, or SIBI, big one-sidedness move lower, okay? Then, once the market had that report in its hands, and it came down to a discount low relative to that imbalance I showed on the hourly chart, then you watch and see if there's a shift in market structure, as I outlined in that short little review on Twitter. Then, that imbalance, I grade that. Okay, I get a full measurement of that, and I'm bracketing it off, where 20 to 25%, 50%, 75 to 80%, and all the way up to a complete repricing of that full move down. That's grading a price swing. It's not used simply just in imbalances like that. I use it also when I'm doing price runs that are not really running back up into a SIBI or running down into a BISI, buy side imbalance, sell side efficiency. And I know some of this is going to go right over your fucking head, and I know, but this is why you got to keep showing up every day. There's no ads here. I'm not getting paid to do this. I do this because I love it. I absolutely want to see you fucking crush it. And I know you can. You don't know you can yet, but I know if you keep showing up, you're going to learn how to do this shit, and you're going to be a fucking menace. You're going to be making fucking money, and you're going to know everything what you're supposed to be doing and what not to do. And these discussions is what gets you there. Not the, give me real quick, bullet point videos, learn ICT in 5 minutes. No. So once I grade those runs, either it's a price swing that I'm trading back up into, or it's just a trend, I'll grade those price swings where I think it's going to go. How do I do that? I have to know where it's likely to reach for. So it takes us back to the draw on liquidity.